It was a Tuesday afternoon, May 17th, 2022. I remember the exact date because it's the day I lost $50,000 in 90 minutes. Not because I had a bad strategy, not because the market crashed, not because I got unlucky. I lost $50,000 because I was angry. The crazy part? The day started with a $2,000 loss. A completely normal, manageable loss on a swing trade that didn't work out. My stop loss hit. I was down $2,000. No big deal. Except it was a big deal to me in that moment because I had just come off my best trading month ever. I'd made $68,000 in April. I was on fire. I felt invincible. And here was this stupid trade, this random loss, threatening to ruin my perfect May. I remember the feeling in my chest, this hot, tight sensation. My jaw clenched. My hands actually started shaking as I stared at that red number on my screen. And then I did what I'd promised myself 100 times I would never do again. I said to myself, I'm getting that money back, right now. I opened a new position, double the size of the one I'd just lost, because in my mind, I needed to make back not just the $2,000, but make up for the injustice of losing in the first place. That trade went against me almost immediately, down $6,000. So I closed it and opened another one, even bigger this time, because now I was down $14,000 total, and that was just unacceptable. I couldn't end the day like that. That's when the spiral really started. For the next hour and a half, I was a machine. Click, 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 in and out of trades. No analysis, no plan, just pure, desperate action. My heart was pounding. I wasn't even looking at charts anymore. I was just reacting to red and green candles like some kind of deranged video game. When I finally stopped, when I literally ran out of buying power and the platform wouldn't let me open another position, I sat there, staring at my account, down $50,347 in 90 minutes. I felt sick. I actually thought I might throw up. Here's what I want you to understand. I didn't have a trading problem that day. I had a revenge problem. And if you've ever done anything even remotely like this, if you've ever tried to win back a loss, if you've ever felt that burning need to prove the market wrong, if you've ever said just one more trade to break even, then this video is going to be uncomfortable because we're going to talk about the psychology of revenge trading, why it's so destructive, and most importantly, how to actually stop doing it. By the end of this video, you're going to understand exactly what's happening in your brain when you revenge trade, why it feels so impossible to stop in the moment, and the specific system I use now to make sure I never have another day like that Tuesday in May. Let's dive in. So what exactly is revenge trading? Simple definition. It's when you take a trade or multiple trades, not because your strategy says to, but because you're trying to recover from a loss and make yourself feel better emotionally. You're not trading the market, you're trading your feelings. And here's the thing, this isn't a personality flaw. This isn't a lack of discipline or willpower. What's actually happening is that your brain, your ancient survival-wired, pattern-seeking brain, is doing exactly what it was designed to do. The problem is, it was designed for surviving on the African savanna 200,000 years ago. Not for trading the S&P 500. Let me explain. The amygdala hijack. When you take a loss, especially an unexpected one or one that threatens your sense of competence, a part of your brain called the amygdala lights up like a Christmas tree. The amygdala is your threat detection system. It's the alarm bell. And when it goes off, it triggers what neuroscientists call an amygdala hijack. Basically, your emotional brain takes over from your rational brain. Your prefrontal cortex, the part that does logical thinking, planning, impulse control, gets shut down. And your amygdala screams, "Threat! Fix this now!" This is the same system that made your ancestors run from lions. The problem is, your brain can't tell the difference between a physical threat and a financial one. A $500 loss triggers the same alarm as a predator in the bushes. And when that alarm goes off, you don't think clearly. You just react. Now here's where it gets worse. The three horsemen: ego, fear, and greed. When you're in revenge mode, there are three emotional forces working in concert to absolutely destroy your trading account. First, ego. This is the voice that says, I was right about that trade. The market is wrong. Or, I know what I'm doing. I'm a good trader. I can't be down money. That's not who I am. Your ego cannot tolerate being wrong. It can't accept that you lost. So it demands vindication. It demands that you prove you're smarter than the market. Spoiler alert, you're not smarter than the market. Nobody is. The market doesn't even know you exist. But your ego doesn't care about logic. It just needs to be right. Second, fear. This is usually fear of loss, but not the loss you already took, the loss of your self-image. What if I'm not actually good at this? What if I've been fooling myself? What if I can't make money trading? That loss you just took threatens your identity as a trader, and that's terrifying. So you need to erase it immediately. You need proof that it was just a fluke. There's also a secondary fear, the fear of regret, the fear that you'll end the day down money and have to live with that feeling. So you keep trading, trying to get back to break-even, because break-even means you can sleep tonight without regret. Third, greed. Not the healthy kind of greed, the desire to build wealth over time. This is desperate greed. I can win it back. I can turn this around. I just need one good trade. Your brain starts showing you all the possibilities, all the ways you could make it back fast. And the bigger your loss gets, the bigger your position sizes become, because you need bigger wins to recover. This is where people blow up accounts. These three forces, ego, fear, and greed, they work together. They're like a team of con artists running a scam on your rational mind. And there's one more psychological principle that makes it even worse: loss. Aversion. The 2x pain principle. There's a concept in behavioral economics called loss aversion. It was discovered by Daniel Kahneman and Amos Tversky, and Kahneman won the Nobel Prize for this work. Here's the principle. Losing money hurts approximately twice as much as gaining the same amount of money feels good. Think about that. If you make $500, you feel pretty good, maybe a 6 out of 10 on the happiness scale. If you lose $500, you feel terrible, like a 2 out of 10. The emotional impact is not equal. This is why revenge trading is so powerful. That loss creates a massive emotional deficit, and your brain desperately wants to fill that hole. It wants to get back to neutral. But here's the trap. When you're trading to avoid pain rather than to follow your strategy, you make terrible decisions. You enter at bad levels. You ignore risk management. You trade too big. You chase price. All because your brain is screaming, "Make the pain stop." The gambler's fallacy. One more thing that fuels revenge trading, the gambler's fallacy. This is the belief that after a series of losses, a win is due, that the universe owes you, that statistically, you're more likely to win the next trade because you've lost the last few. But markets don't work that way. Every trade is independent. The market doesn't know you lost the last 3 trades. It doesn't care. It's not keeping score. But your brain thinks it does. Your brain sees patterns where there are none. It thinks, I've lost 4 in a row. The 5th one has to work. And so you keep going. One more trade, one more chance. Okay, so that's the science. That's what's happening in your brain. Now let me show you what it looks like in action. Every revenge trading episode follows the same pattern, same structure, same phases. Once you understand this cycle, you'll start to see it happening in real time, which is the first step to stopping it. Phase 1, the trigger loss. It always starts with a loss, but not just any loss. Usually it's a loss that comes after a winning streak. You've been doing great, feeling confident, and then bam, you get hit. Or it's a loss that feels unfair, like you did everything right, but the market just did something random and stopped you out. Or it's a loss that's bigger than normal because you broke your position sizing rules. The common thread, the loss feels personal. It feels wrong. It threatens your self-image. I'll give you an example from my own trading. Back in 2021, I was trading Bitcoin. I'd had 5 winning trades in a row over 2 weeks. I was up about $17,000, feeling like a genius. Then I took a long position at $58,000, thinking we were going to 60K. I had my stop at 56,800. Bitcoin dropped like a stone, hit my stop. I was out with a $3,000 loss. And immediately, I felt this wave of anger. That was manipulation. That was just a fake out to hit stops. It's going back up. I know it is. That's the trigger. That's phase 1. Phase 2, Emotional hijacking. This is where the amygdala takes over. Your rational brain knows you should walk away. You know what the smart move is, but you don't do it because your emotional brain is louder. You feel anger at the market, frustration at yourself, wounded pride, urgency to fix this immediately. And here's what's insidious. These feelings don't feel like emotions in the moment. They feel like insights. You genuinely believe you're thinking clearly. You tell yourself, I'm not being emotional. I'm seeing an opportunity. I'm being strategic. But you're not. You're hijacked. In my Bitcoin example, I told myself, this is actually a better entry now. I'm getting in at a better price. See how the brain rationalizes? It wasn't revenge. It was smart trading. Except I was trading with double the position size because I needed to make back that $3,000 faster. That's how you know it's revenge. The position size changes. Phase 3, the override. This is where you override all your rules. You ignore your stop loss, or you move it further away just this once. You increase your position size beyond your risk management rules. You enter trades that don't meet your setup criteria. You trade instruments you don't normally trade. You might even switch time frames, going from swing trades to day trades or day trades to scalping because you need faster results. All your discipline, all your planning, all your systems out the window. Because in this moment, the only thing that matters is getting back to break even. When I re-entered that Bitcoin position, I broke 3 rules. I doubled my position size, should have been $1,200 risk, I went to $3,000. I entered without a clear setup, price was just falling, no reversal signal. I didn't set a mental stop loss. I told myself, I'll just watch it. All 3 of those rules existed for a reason. I'd learned them through painful experience, but none of that mattered in the moment. Phase 4, the spiral. Here's where it gets really bad. That revenge trade, it loses too. And now you're down even more. Now the pain is worse. Now the need to recover is urgent. So you do it again. Each loss makes the next trade more desperate. Each trade gets bigger, faster, less thought out. You're no longer trading, you're panic gambling. In my Bitcoin situation, here's what happened. Second trade, Bitcoin continued down. I closed at $56,000, now down $6,000 total. Third trade, tried to short the breakdown. It bounced, closed at $56,800, down $13,000. Fourth trade, long again at $57,000, thinking this has to be the bottom. It wasn't. Stopped at $56,200, down $19,000. At this point, I'd been trading for maybe 45 minutes. I'd completely abandoned my swing trading strategy and was just reacting. My heart rate was probably 140. I couldn't sit still. I was sweating, and I kept thinking, just one more, and I'll stop. Phase 5, the wipeout. Eventually, one of 3 things happens. Option A, you blow through your daily loss limit and your account is seriously damaged. This is what happened to me on that May Tuesday, down $50,347 before I literally couldn't trade anymore. Option B, you catch a lucky winner that brings you close to break even and you stop. You feel relieved, but you've reinforced the behavior. Your brain learns revenge trading works sometimes. This is actually the worst outcome long term because it means you'll do it again. Option C, you have some external interruption. Phone rings, someone walks in, you have to leave. That snaps you out of it. You stop trading not because you chose to, but because you had to. None of these are good outcomes. With Bitcoin, I finally stopped when I got a margin call warning. I was using leverage, and the platform sent me an alert that I was about to be liquidated. That's what it took for me to stop clicking. I closed everything, sat there staring at the screen, down $19,000 on the day, starting with a $3,000 loss. Here's what's important to understand. This cycle is predictable. It's not random. It's not a lack of discipline. It's a biological response that happens to all of us unless we have systems in place to interrupt it. And that's what we're going to talk about next. All right? So you understand the science. You recognize the cycle. Now, how do you actually stop doing this? I'm going to give you 5 specific strategies that work. I use all 5 of them. They're not theory. They're practical tools I implemented after that $12,000 day. Strategy 1, the 30-minute rule. This is the most important one, the circuit breaker. The rule, after any losing trade, you must step away from your computer for at least 30 minutes. no exceptions. Not check your phone, not just look at the charts, complete disconnection, go for a walk, do push-ups, play with your dog, call a friend, anything that gets you physically away from the ability to trade. Why 30 minutes? Because that's approximately how long it takes for the stress hormones, cortisol and adrenaline, to start clearing from your system. That's how long it takes for your prefrontal cortex to come back online. After 30 minutes, you can think clearly again. The urgency fades. The emotional charge dissipates. I cannot overstate how effective this is. If I had walked away for 30 minutes after that first Bitcoin loss, I would have saved $3,100. If I'd walked away after my second loss, I would have saved $1,900. Every single time I ignored this rule, I paid for it. Every single time I followed it, I saved myself. Your brain will fight this rule. It'll say, but the setup is right now. If I wait 30 minutes, I'll miss it. Here's the truth. If the setup is still there in 30 minutes, it was a real setup. If it's gone, it was probably a revenge trade disguised as an opportunity. Real opportunities don't disappear in half an hour. Strategy 2, the post-loss ritual. This comes from sports psychology, specifically from Steve Ward, who works with traders and athletes. After every loss, you perform a 4-step ritual. Every time, no skipping. Step 1, acknowledge. Say out loud, I took a loss. That's part of trading. This isn't toxic positivity. This is reality. Losses are the cost of doing business. Acknowledging this reduces the emotional charge. Step 2, learn. Ask yourself, did I follow my rules? If yes, the loss was just probability playing out. No action needed. If no, identify exactly which rule you broke. Write it down. Step 3, rehearse. Mentally rehearse what you'll do differently next time. Visualize yourself following your rules perfectly. This creates a new neural pathway. Your brain starts to associate losses with learning, not with panic. Step 4, affirm. Say one true thing about your trading process. Examples: I have a proven strategy. I control my risk on every trade. I'm building consistency over time. This rebuilds your confidence on a process level, not an outcome level. The whole ritual takes maybe 2 minutes. Do it immediately after every loss. It sounds simple. It sounds almost silly. But I'm telling you, this works. It interrupts the revenge cycle before it starts. Strategy 3, reduce position size after losses. This is counterintuitive, but crucial. After any losing trade, your next trade should be half your normal size, not double. Half. Why? 2 reasons. First, it protects you during the vulnerable period. If you're wrong about your emotional state, if you think you're calm but you're actually tilted, smaller size means smaller damage. Second, it removes the temptation to win it back fast. You can't win back a $500 loss with a $250 risk trade. The math doesn't work. So your brain stops trying. I know this feels wrong. Your instinct after a loss is to make up for it with a bigger winner. But professional traders do the opposite. They trade their smallest after losses, their largest after a series of wins, because they know emotional trading kills accounts. Conservative trading builds them. Strategy 4, the power of acceptance. This is the mindset shift that changed everything for me. Losses are not failures. Losses are tuition. Every time you lose money following your rules, you're paying tuition for staying in the game. You're paying for the opportunity to catch the winners. Think of it like Netflix. You pay $15 a month. Some months you barely watch anything. Some months you binge 10 series. You don't call customer service after a quiet month and demand your money back. You understand. You're paying for access, not per show. Trading is the same. Your losses are paying for access to the market. They're paying for the opportunity to be there when the big winners come. When I started viewing losses this way, as a subscription fee rather than a failure, the emotional charge disappeared. I could take a $500 loss and think, that's this week's tuition. Okay, what's next? No revenge, no anger, just acceptance. This takes practice. I'm not going to lie to you. This is hard at first, but over time, it becomes automatic. And when it does, revenge trading becomes almost impossible. Strategy 5, daily loss limits, hard stops. This is your last line of defense. Set a maximum dollar amount you're allowed to lose in a single day. When you hit it, you're done. no exceptions. For most traders, this should be 2 to 3% of your account. If you have a $50,000 account, your daily loss limit might be $1,000. Hit that limit, close your platform, walk away, day is over. This does two things. First, it protects your account from catastrophic damage. One bad day can't ruin you. Second, it removes the decision-making burden when you're emotional. You don't have to decide whether to keep trading. The rule decides for you. Now here's the key. You need to automate this if possible. Some platforms let you set daily loss limits that literally prevent you from trading. Use that feature. If your platform doesn't have it, write the number on a sticky note and put it on your monitor. Make it visible. And here's the hard part. You have to honor it. I don't care if you hit your daily limit at 9:45 a.m. and the best setup of the year appears at 10:30 a.m. Tough. You're done for the day. Because here's the truth. If you can't honor your daily loss limit, you can't honor any of your rules. And if you can't honor your rules, you can't be a consistently profitable trader. It's that simple. These 5 strategies, the 30-minute rule, the post-loss ritual, reduce position sizing, acceptance mindset, and hard stop limits, they work together as a system. You don't need all 5 to stop revenge trading, but the more you implement, the safer you are. I use all 5 every single trading day, and I haven't had a revenge trading episode in over 2 years. Let me tell you what my trading looks like now. Last Tuesday, almost exactly 3 years after that $50,000 disaster, I took a loss, $720. I felt the familiar tightness in my chest. I felt the urge to open another trade immediately. But instead, I closed my laptop, I went for a walk, 35 minutes. When I came back, I looked at the market. There was a setup, a pretty good one actually, but it was the end of the day, and I'd already taken one loss. So I passed. I wrote in my journal, lost today, $720. Followed all rules. Tempted to revenge trade. Didn't. Win. And I meant it. That was a winning day. Not because of my P&L, because I followed my process. Here's what I need you to understand. The market doesn't care about your feelings. It doesn't care that you lost. It doesn't care that you need to win. It doesn't care that you feel angry or frustrated or desperate. The market just is. It moves based on supply and demand, based on millions of participants with different goals and timeframes. Your individual need to recover a loss doesn't factor into its movement at all. And once you truly accept that, once you internalize it, revenge trading loses its power over you because you realize trying to force the market to give you your money back is like trying to argue with the ocean. It's pointless. The ocean doesn't care about your argument. It just keeps being the ocean. So here's my challenge to you. The next time you take a loss, and you will take a loss, that's guaranteed, I want you to implement just one of these strategies. Just one. Try the 30-minute rule. Close your platform and walk away. Or try the post-loss ritual. Acknowledge, learn, rehearse, affirm. Pick one. Do it. See what happens. And if you're feeling brave, here's what I really want you to do. Share your revenge trading story in the comments. Tell me about a time you blew up a trade or a day or an account because you couldn't let a loss go. You don't have to use your real name. You don't have to give specific numbers. Just tell the story. Because here's what I've learned. We all think we're the only one. We all think our revenge trading is uniquely shameful. But it's not. It's universal. Every trader has done this. The only difference between traders who make it and traders who don't is that the ones who make it figured out how to stop. And now you know how to stop. You have the tools, you understand the psychology, you know the system. The only question is, will you use it? I'll see you in the next video where we're going to talk about FOMO, the fear of missing out, and why it makes you buy at the top of every move. Until then, trade small, trade smart, and for God's sake, walk away after your losses. Thanks for watching.